It's the weekend before the very last of 2018. Welcome to the program Capital Market. I'm Temple Ashaju. The just concluded week was statistically loaded. We saw the release of jobs report, which detailed Nigeria's unemployment rate coming in higher at 23.1%. Crude oil prices also tanked this week at about $54 per barrel, falling below Nigeria's assumption of a $60 per barrel benchmark in its 2019 budget. Finally, President Muhammadu Buhari also presented an 8.83 trillion naira budget to the National Assembly this week. Assumptions of the budget mainly include crude oil production at 2.3 million barrels per day against the current production of 1.8 million barrels per day and the latest OPEC output cut projections for Nigeria, which has been trimmed down. Now, oil prices also pegged in the budget at $60 per barrel as inflation is projected at single digit with 2.14 trillion naira set aside for debt servicing, and that's like 25%. Although the fiscal plan for next year is smaller, but analyst reaction to the budget has been widely negative. Well, let's get down to business and present our own offerings this weekend to you. And of course, we have a reaction in that regard. A former Deputy Governor of the Central Bank of Nigeria, Mr. Tunde Lemo, has forecast cash flow constraints for Nigeria against 2019. In his reactions to the budget presented by the President Muhammadu Buhari, he commended the cuts down in estimates, but strongly disagrees with the assumptions which he attributes to the projections.
I commend the president. Symbolically, is lower than what the budget was before. So it's gotten out of this mindset that every budget year must be bigger than the one before. And of course, it's been realistic. But I don't think they are conservative enough, because when you look at the key assumptions, you find out that we are still in an El Dorado of a sort. For instance, oil price is expected in the budget, is assumed to be $60 a barrel, when indeed Brent is trading at 58. Our Bonnet Light is a bit inferior to Brent, so it will trail that price. I don't think $60 a barrel. I think it's a bit too ambitious. And then, of course, the volume, the production is estimated at 2.3 plus condensate. This, again, for me, is too ambitious, when indeed, at best, I'm not sure we hit 2 million barrels a day anytime this year. Maybe we hover around 1.8. Well, you have to estimate some disruption around election time and what have you. So when you put all of that in, I think the budget is a bit too ambitious. Again, you also have to look at it against the backdrop of the major issues that we already have. The subsidy issue. Government is spending 1.6 trillion on subsidy. We are spending 30% of our recurrent revenue, servicing debt. In fact, up to 60% of independent revenue. For me, this clearly shows that there may be significant cash flow problem next year. And indeed, like the president said, everybody, we must tighten our belts and then, of course, look at the numbers again. The solution lies somewhere. But again, not even in the independent revenue. The non-tax revenue of government is still low. I had people celebrate 5 trillion revenue since the beginning of the year. Tax to GDP ratio in Nigeria of 6% is still very, very low, about the lowest in Africa. We need to widen this up. Otherwise, there will be fiscal crisis next year. When you have decaying infrastructure, of course, that does not help productivity. That does not help output. Again, you look at it, today banks are not seriously lending, largely because central bank must, of course, in conducting monetary policy, money is very, very tight because of some other objective that they are trying to achieve to stabilize the dollar. All of this then means that capacity utilization is low. And we need to free up resources, in my view. For me, I think we should attack growth better than inflation. If you ask me, if I juggle those balls, I would rather have higher inflation and higher output so that I deal with unemployment.